5-6 years.
BA also warned this morning that its fuel bill could soar by £1 billion if oil prices remain at current record levels. While the airlines and motorists suffer, the record oil price has been benefiting the government. According to the British Chamber of Commerce, the Treasury is now raking in £500 million more tax and VAT than it expected. It argues that the chancellor can afford not to put fuel duty up by 2p in October as planned. Our money reporter, Bridgid Nzekwu, has been looking at the impact of rising fuel prices on a road haulage company in Kent.
Back to the depot to reload. This lorry is part of the Seymour haulage company fleet in Maidstone in Kent. The firm's fuel bill is now £30,000 a month more than it was in November.
Every day the fuel price is creeping up, rising. It's like building up to a tsunami effect. It's something I and many of my colleagues have never seen in all the trading history that we've got as road hauliers. And it's devastating, particularly the small haulage companies, maybe with 5 to 10 trucks.
Seymour delivers concrete, steel and gravel around the UK. Although the company is coping with its fuel bill, it fears another increase in fuel duty. Hauliers already pay more than 52 pence in tax for every litre of diesel.
At the moment, it costs the company £1,000 a week in diesel to run each of its 55 articulated lorries. Fortunately, the company is able to pass some of its increased fuel costs on to larger customers. But as many of its clients are in the construction industry, which is itself suffering from the slump in the housing market, many can't or won't accept increased costs, with the result that Seymour has lost a number of contracts.
The British Chambers of Commerce has released figures which it says can prove the government can afford not to increase fuel duty. They say the Treasury assumed in March that oil would be trading at almost $84 a barrel, but the price has recently gone well over $126. According to the BCC's calculations, that generated an extra £390 million in tax revenue from North Sea oil, plus £115 million extra in VAT on fuel at the pump. That means an unexpected total windfall of £505 million for the Treasury since the 1st of April.
As of today, because of the high price of oil, the government's already taken from road users the tax it would have raised with its increase in fuel duty in October this financial year. It will raise many times more that over the course of the year. We're calling on the government to abandon its proposed increase because it will raise the costs for businesses across the economy at a time when the economy faces difficulty.
In response, a Treasury statement says,
"Current high fuel prices have not resulted in a VAT windfall. This is because when people need to spend more on one commodity such as fuel, they tend to spend less on others, leaving the overall level of VAT receipts largely unchanged."
The Treasury also insists that fuel duty has fallen 16% in real terms since 1999. But that's no comfort to Seymour, which has seen the price of diesel rise almost by half since the beginning of last year. Across the country, hauliers are on the warpath and are preparing for a fuel protest on the 27th of May.
And if you have any comments or experience of rising fuel costs, do email us news@channel4.com.